Here is the overview of today's gold market news. Gold price performance, price trends, and technical outlook. U.S. Federal Reserve caution, dollar slide, and Trump-Powell rift fuel gold sentiments. Gold holds gains amid U.S. holiday slump and rising recession fears. Let's look at the latest gold price performance, price trends, and technical outlook. Gold soared to an all-time high of $3,358 per ounce on Wednesday, marking a 13% weekly gain, about $360, before experiencing some profit-taking on Thursday, ahead of the Easter weekend. Despite the pullback, gold held strong support around $3,300 and closed the week at $3,316.90, a 2.5% weekly gain. Analysts note this surge reflects the weakening U.S. dollar, a flight to safety amid trade tensions, global economic and geopolitical uncertainty, as investors averse risk, flocking to safe haven assets such as gold and other precious metals as a store of value. Gold's uptrend remains technically solid, despite Thursday's pullback below $3,330. The relative strength index remains in overbought territory, suggesting that a mean reversion correction may be likely soon. The key levels to watch are support at $3,300 and the April 16th low of $3,229. A break above the resistance of $3,350 could open the door to $3,400 and new highs. In the overall, gold remains bullish, but short-term momentum may pause or consolidate. Analysts highlighted signs of gold being heavily overbought, and technical signals show risk of pullback. The moving average convergence divergence has reached levels not seen since April 2011, just before gold's last major peak. They view this week's explosive rally a blow-off top, which typically signals a possible short-term reversal or correction. Despite this, gold remains in a solid uptrend, and any correction may present an opportunity rather than a trend reversal. While gold's momentum is strong, with the rally expected to continue, some analysts foresee a looming risk of market correction. Analysts anticipate a future to $100 to $300 pullback, though not immediately, citing ongoing geopolitical uncertainties as a stabilizing factor. They note that gold is trading $1,000 to $175 above its 200-week moving average, a 61% premium, which is difficult to sustain long-term. Unless macro conditions remain extremely favorable, a mean reversion could pull prices back. Moving on, let's look at the recent U.S. Federal Reserve caution, dollar slide, and Trump-Powell rift fueling gold sentiments. Federal Reserve Chair Jerome Powell's hawkish remarks midweek dampened gold's upward momentum, contributing to Thursday's pullback. Mary Daly, the San Francisco Federal Reserve president, reiterated that policy remains restrictive, stating that the neutral rate may be rising, supporting Powell's view and indicating less dovishness ahead. This hawkish tone counterbalances some of the bullish sentiment in gold markets. The U.S. 10-year Treasury yield rose 5 basis points to 4.3%, while real yields, which are nominal yields minus inflation expectations, also climbed to 2.2%, creating headwind for non-yielding assets like gold. Despite this, gold held firm due to broader macroeconomic uncertainties. The key U.S. economic data next Wednesday and Thursday that traders will be closely watching includes the S&P Global Flash Purchasing Manager Index, the durable goods orders, the University of Michigan final consumer sentiment, new and existing home sales, weekly jobless claims. These reports may influence interest rate expectations and thus impact gold's short-term direction. The U.S. dollar index weakened to 99.49, its lowest level in 3 years, further supporting gold's rally. Analysts argue the decline in the dollar is largely driven by loss of confidence in U.S. leadership and policy direction. Analysts emphasize the impact of Trump's America First approach. Policy uncertainty and weakened U.S. economic credibility has weakened the dollar's role internationally. Though no currency currently rivals the U.S. dollar as the global reserve, gold is increasingly seen as a replacement hedge in an uncertain currency environment. President Donald Trump's public criticism of Federal Reserve Chair Jerome Powell added political risk and tensions with the Federal Reserve and further volatility to the market. Trump accused Powell of being late and wrong in his policies and called for his removal. This criticism follows Powell's speech in Chicago, where he maintained a neutral monetary stance, balancing rising inflation concerns against economic slowdown risks. The contrast in central bank approaches was also noted. While the Federal Reserve holds steady, the European Central Bank cut interest rates and signaled further easing, potentially strengthening gold's case as a global hedge. Moving on, let's look at how gold holds gains amid U.S. holiday slump and rising recession fears. European and U.S. markets were closed for the long Easter weekend, reducing trading volume and leading to profit-taking at elevated levels. The lighter news flow also meant fewer catalysts to sustain the rally near highs. Due to the Easter long weekend, markets are closed on Friday and will be thin on Monday. This sets the stage for geopolitical headlines to drive sentiment, possibly adding volatility to gold prices. With light data and thin liquidity, traders are likely to react sharply to any new developments. Investor sentiment remains bullish due to ongoing concerns over a global recession and U.S.-China trade tensions. Gold has already climbed 28% year-to-date, surpassing last year's 24% rally, reflecting its safe haven appeal in turbulent times.